Hey, everybody. My name is Gareth Soloway, and welcome to the weekly wrap up here at verifiedinvesting.com. So, it has been an epic week of economic data. Federal Reserve releases their statement and policy kind of corrections, if you will. Earnings have been out. Everything has been going nuts. Markets, again, were grinding up early in the week and then took a tumble late. And I've been warning about this. We've been seeing more and more cracks in the glass that essentially instilling signals that were telling us the markets were going to fall. So I'm going to go over those signals because my hope is that you guys can learn them and ultimately spot them in the future without my help in the game plans in the morning or this market weekly wrap up. All right, so let's get right into the action here as we get going. Markets, by the way, are down pretty sharply on the day. If we take a look here, we can see the S&P is trading just off the lows of the day, down about 1.5%. Now, if we go to the daily chart, I'm going to go over a few things. So number one, parallel channels are an underreported major factor in technical analysis. In fact, most players out there do not know about parallel channels, but they are powerful beyond belief. In fact, you can see right here the low from October 2023 to this low in April, the April 7th low. You simply take those two lines or 2 points, connect a line to them, and drag a parallel up, bring it right up to the highest point right there, and look at where the market topped. Now, even before we hit that line, there were signals that the market was getting ready to sell, that essentially institutions were dumping. Now, what were those signals? Well, if you look at the price action, we kept on gapping up and then selling off. On Monday, we opened higher, closed flat. Tuesday opened higher, closed negative. Wednesday, higher, closed negative. Thursday, which was yesterday, we had those earnings from Meta and Microsoft, a massive gap up, which took us right to the parallel trend line of resistance. And what a sell-off we got. And then obviously the continuation today. And again, when you see a market that continues to gap up and then sell, we know that that is institutional unloading. Now, why is it institutional unloading? Well, because essentially the retail investor is the one that buys at the open. They're the ones jumping in. So the institutions will allow the markets to float up in the pre-market. And then once they get the liquidity of the retail investor, they're just pounding that sell button into those retail players. And that's, again, why the market opens up but then closes negative. So always look for those signals in the charts or in the price action. And it really only is most important when you're at highs or lows. So lows would be the inverse, right? Lows, if we were gapping lower and then rallying up off the lows on good volume, that would be a signal that the market was getting ready to rally to the upside. All right, so we have an S&P down 1.55%. For the week, we are on a negative week, right? Even though yesterday we were at a new all-time high, the 2 down days here, and this is pretty remarkable, guys, the 2 down days right here, if we close right here, we just negated the price action all the way over to July 2nd. So 1 month of a grind up, and it got erased in 2 trading days. That's pretty impressive. Partially the fact that we were just going up very little each day. And by the way, when you go up very little each day, it's also a signal that the buyers are running out of steam. So retail was getting stretched. Yeah, they were putting money in, but it was getting less and less, which made the gains smaller and smaller on a daily basis. Another sign that the market was coming to an end of its run. And then lastly, folks, this trend line I've been alerting to you guys for days, if not weeks. We talked about your low point on April 7th connected to your secondary lowest point. Now, why is that your secondary lowest point? Because there's no other point along the way that touches the trend line. This is the first one. And then we came over here, we closed below it. And sure, we still ground higher on the market, but we never got back above. This was what I referred to in the game plans all week, this week and last week, as essentially hanging off the cliff, meaning that you're still holding onto the cliff, but you're over the edge and you're just one step away from falling over the cliff. Now, listen, in all seriousness, we're not down much. I think we're down about 3% off all-time highs. That's not a huge move by any stretch. But again, in theory, the reversal candle we got yesterday and the same one on the QQQ, which we have right here, this is a big deal. So I've talked to you guys about topping tails before. Topping tails are great bearish reversal candles when they occur at highs of charts. We saw it recently on Bitcoin, right? Bitcoin, obviously, we'll go over that chart in just a few minutes. But the one-upmanship on a topping tail is a reversal engulfing candle. That is like the king, queen, whatever you want to talk about in terms of candle reversal signals. And what did we get yesterday on the QQQ? We opened above the previous highs and we closed below the previous day low. That again would equate to what is a textbook engulfing reversal candle. And that is even a more powerful signal than a topping tail. And it was followed up by additional selling today. The NASDAQ ending down 2% on the day. Now, what was the culprit of this selling? Let's talk about it. Essentially, the jobs report combined with the inflation report. Now, the mainstream media, honestly, is saying, oh, it's these tariffs that went into effect on August 1st. Nonsense. All right. Now, I'm not saying that didn't play a small role. It's kind of like the straw that broke the camel's back. But in essence, everyone knew about these tariffs, right? And most deals are done, right? I mean, Europe's deal, Japan, Mexico got a 30-day reprieve or 90-day reprieve. Canada, yes, the tariffs went up there, but it's the ultimate purpose. We already know the president wants 15% across the board. Some countries maybe a little bit more, but basically that's the base case, and that's what we're working to. So if you have tariffs that go up a little bit more than that now, 30%, 40%, 50%, it's incentivizing those countries to make a deal for 15%. So again, that's not a big deal. We know about that. What we didn't know coming into this week was that the labor market was going to be as weak as it was in today's report. Participation rate, U6, was horrendous. The jobs report came in not super negative, right? It was around 73,000 versus the 106,000 expected, but it's the other factors that showed weakness. In addition, we just got out of the Fed meeting where Jerome Powell's like, hey, listen, I still think inflation is coming from all these tariffs. And so he's basically telling us we don't want to cut rates because inflation is upticking. And by the way, on Thursday, the PCE confirmed that with a year-over-year 2.7 inflation print. But then you have a jobs market that is struggling. So you have higher inflation, weaker economy. That spells stagflation. And when you have a valuation on the stock market at forward PE on the S&P of 23 times, which is historically really, really expensive, that's a recipe for a correction. Now, am I calling for a bear market? No, not necessarily. But I think you just have to be realistic that the markets can't go up every day forever. You're going to have a 5-10% pullback at minimum. And I think that's what we're on the verge of here. All right, so back to the charts we go. The dollar today fell sharply. Why would the dollar fall, guys? Think about this. The dollar fell simply because weaker economic news makes it more likely the Federal Reserve will have to cut or stimulate. And stimulation of the dollar means more printing of the dollar, which means a weaker dollar, right? In that same vein, we saw the 10-year yield getting crushed. This is a massive move on the 10-year yield. And this is the same reason, right? Is that a weaker economy means rates are likely coming down. Now, remember, the Fed does not control the long end of the curve, the 10-year, the 20-year, the 30-year. But again, when they cut rates, it tends to influence those at least in the near term, which again, expectations now are for a cut. And I think that's important to note. If you paid attention early in the week on Thursday, we talked about how the Fed watch tool was saying no cut in September now, no cut at all. Only one cut this year. After today's jobs report, the cut in September is back on. And I actually do think it will happen because, again, I think the Fed has to make sure that they kind of have to stay in this gray area where they don't go too hard-nosed one way or the other. Giving one cut, not a big deal. It's not going to influence much, but at least it shows that they're active in terms of protecting the economy. All right, so that's where we are. But look at the 10-year yield breaking down below the wedge pattern here. Amazing wedge pattern break. And again, if it confirms, I think yields could bounce back to the scene of the crime, and then they're ultimately going to go lower. But by the way, 18 basis points today, right? A Fed rate cut of 25 basis points. That's almost what we got today in the 10-year yield. That's pretty remarkable. All right. Apple earnings were decent, but the stock just couldn't hold up. This has been a common theme that I've addressed to you guys. In fact, it's been one of the other warning signs that I've been bringing to your attention. When you have a stock that's at all-time highs, and by the way, Apple wasn't at all-time highs, but we'll talk about Microsoft and Meta. when they gap up on earnings and they can't hold their gains like so many stocks this earnings season have done, that is a signal of, again, is it mom and pop saying, oh, Microsoft, I guess it's gone far enough? No, it's institutional money. It's hedge fund money dumping into the good news. And that's what you're seeing here. So again, these signals, put them in your minds. Remember them in the future. If we look over at Amazon also down on earnings today, but quickly let's look at Meta. So Meta had a good day on earnings yesterday, coming right back in today, but Microsoft, holy cow, almost has given up the entire earnings move. Again, parallel channels. I started with a parallel channel on the S&P 500, and right here, another parallel showing us it marked a top on Microsoft. In fact, yesterday morning, in the game plan, I gave you guys the top of that, and I said, I'm going short right here. Look at where it went. Amazing. And guys, all I did was looking at the recent earnings. Like almost every company that reported good earnings, it would open up high, and then it would just fade all day. A lot of them even going negative on the day. Classic institutional dumping right there. Okay. Tesla, let's look at Tesla here. Tesla came down and tested the lower point on the wedge here. The wedge is still holding, which gives us a coiling spring. The question is, which way does it break? Does it break eventually to the upside or the downside? Remember, when it breaks whatever direction it does break, it tends to be a big move. That's because, again, wedges condense price tighter and tighter. And then when it's finally released, it has that big drop or big pop to the upside, AKA going back to the 10-year right here, right? This is a move here. Now, again, down move, and then I would think we're going even lower on the 10-year as I expect the economy to continue to weaken. And by the way, a lot of people kind of stunned by the jobs report today. Wow, we didn't really see anything from the tariffs. Well, there's a lag effect. Always remember that we see the news in real time, but the time it takes to cycle through the economy, it takes months. Just like interest rate cuts and raises, right? I mean, you'll always hear, if you pay attention to Fed policy, that the cut that they do, let's say next month, the market doesn't feel it for 3 to 6 months. All right, because it takes time. And so again, same thing with inflation from tariffs, is that it takes time to cycle through. So just remember that in the future. We're always so ready to say, oh, that was bad this or good this. And why isn't the market reacting to that? Because it takes time to cycle through. Again, you got to give the market time. It takes time. All right, a couple other things here. Let's go to Bitcoin. Again, Bitcoin, so many people were calling this a bull flag. I saw so many of you guys commenting how you understood what I was saying when I said that the latest signal is the dominant one. And here you had the topping tail right here. That was a bearish reversal signal. So therefore, again, 99% of technicians out there, they're like, oh, this is a bull flag. Look at that. It's a bull flag, a move up. I come to you guys and I say, nope, this is actually a bear flag, because the dominant factor is the topping tail, and this is consolidation off of that. And here is your result. Bitcoin is now trading down to 113,000. Now, having said that, there is a major level on Bitcoin approaching that I want you guys to watch. If you're a bull, you have to hold the line here. Like, you have to try. Like, Michael Saylor's got to be on the buy button and holding the line here. This trend line, which also is right here, look at this, down sloping trend line. So basically 111 to 109,000, you need Bitcoin to hold that. If Bitcoin breaks here, that's going to be problematic for the bull market in Bitcoin. All right. In other words, if it breaks this, it's probably going below 100. So watch this 109,000 to 111,000 level. That is a major technical level to keep an eye on. All right, I'll keep you guys updated in the game plans. Gold, big move on gold. Some people were saying, oh, well, why is gold up in this? Well, simply put, the dollar down today, right? The dollar fell. That's good for gold. And also uncertainty. The jobs number creating more uncertainty, more chance of printing money. That's going to drive gold up. But do I think gold is now going to all-time highs? And this is really important, folks. So as a trader, what I think doesn't matter. What you think doesn't matter. Doesn't matter. Doesn't matter. What matters is the charts. And I've learned this the hard way. I've taken many hard lessons learning that my personal opinions don't matter. The charts don't care about my personal opinions. And in fact, they're usually wrong. The charts are where we get probability from. And probability, when we see something, let's say 70, 80% success rate, just keep betting on that line. And your win rate is going to make you a millionaire over time. I mean, that's just the way it works. Okay, so even though the data today tells us, oh, well, gold could be starting to rip up again, unless we take out this range of resistance here, you can't assume that. In fact, probability wise is that this is going to be a rejection zone for gold, and gold, even if it hits it, would result in falling back down lower. Now, gold on the downside, I mean, it's not like there's that much downside to it. 3140 is a good level there. Eventually, I do think it's going to go up. In fact, this is still a bullish pattern overall, but you got to respect resistance regardless of what our personal beliefs are. Silver didn't do much today. Silver held sideways to slight gain. Again, it doesn't have the same reaction as a safe haven asset as gold. It's more industrial at this point. I, for one, am noting you see all this sideways chop. That's kind of why you have support there. But for me, this former scene of the crime, pivot point to pivot point to pivot point, if it gets down to about 34.60, 65, I become a buyer. All right, next up, let's take a look at oil. Oil fell sharply. Remember, I gave you a heads up in the game plans every morning, by the way, at 9 a.m., Monday through Friday. I do the game plan live to give you guys my latest trades and levels. And this right here was a level I shorted with my commodity members, Smart Money Commodities. And again, we use only ETFs. I only use ETFs. So even if someone who just trades stocks can do it. I bought the SCO here, which is a 2 times inverse of oil. But beautiful trade. We're in the money already. Again, all I did was just notice the bear flag. It broke, but then it recaptured. So therefore, the top end of it was going to be resistance. Okay, short it. Again, my feelings and looking at the data tells me that the U.S. economy is slowing. That should be bearish for oil as well. So short into the technicals, and down we come here. So again, in the money there, I'm still in the position. I'm hopeful that it breaks through this, and then I might take profits here or maybe wait for the $60 even number, which should be significant support. And then lastly, natural gas, guys. Nat gas here. Let's take a look and see what we have on that. And if we look at natural gas, it didn't do a whole lot today, but I do love this chart setup, right? The breakdown of this upsloping trend line from here, right? It consolidated and then bear flagged essentially and broke down, tagged the support number 4, and then got a little bounce. Now, again, no trade for me here. There's not enough risk reward, right? I mean, if you're buying here and your upside is only here, that's a really thin margin to have for a profit considering the volatile moves natural gas can have. But like I said, if it breaks down, which I eventually expected to do, I would be a buyer at 263. All right, so listen, guys, it was a week for the ages. We have a lot more earnings next week as well, although the big trillion-dollar companies, except for NVIDIA, have already reported. But when it all comes down to it, the market's going to have a lot to digest with the data from the inflation, the Fed commentary, the economic news, all of that together, plus this market that has now shown us reversal signals. There's a lot to look forward to next week on the volatility front. And again, the VIX did spike, and I do expect further upside in the VIX. You guys are amazing. Thank you for your support. I always hope I bring my A game to these things in terms of explaining my concepts, my insights, and my analysis, as well as giving you trade ideas. Remember, verified investing is all about no BS, just the charts. You guys go have a great weekend. We'll talk to you next week. Take care.